A single decision, worth $750 billion, has just shaken global markets. Investors are calling it the most aggressive trade move in decades. Europe is scrambling. Wall Street is tense. And the crypto world? It's bracing for impact. Because when a US president makes a move this big, the ripple effects touch every wallet, every business, and every investor worldwide. If you're not paying attention, you could miss the biggest wealth transfer of the decade. So what exactly happened? Former President Donald Trump announced a $750 billion trade and tariff package aimed directly at Europe. This isn't just about steel, cars, or agriculture. It's about reshaping global trade and rewriting the rules of money itself. The question is, how will this move affect your investments, and what does crypto have to do with it? Let's break it down. First, let's understand the scale. $750 billion. That's not just a number, it's more than the GDP of Switzerland. It's enough to build entire countries. Trump's plan is simple: put pressure on European exports, force renegotiations, and bring production back to US soil. Now here's the problem. Europe depends heavily on exporting to the US, cars from Germany, luxury goods from France, machinery from Italy. And when tariffs this large hit, the cost of those products skyrockets. Who pays for it? Consumers, businesses, investors. That's why European stocks have already started showing signs of volatility. But this isn't just a Europe problem. It's a global problem. When Europe bleeds, Wall Street feels it. And when Wall Street shakes, crypto reacts. History shows us something important. Whenever traditional markets get disrupted, investors look for alternatives. Think back to Brexit, 2016. Bitcoin spiked. COVID crash, 2020. Bitcoin dipped, then surged as stimulus money flooded the system. Trade wars, 2018. Gold and crypto both gained momentum as safe havens. This time, Trump's $750 billion move could trigger the same reaction. As European and US stocks face uncertainty, crypto may become the escape valve for global capital. Already, analysts are pointing to Bitcoin, Ethereum, and even stablecoins as neutral zones in a trade war. Because unlike euros, dollars, or tariffs, blockchain doesn't play by those rules. So what coins stand to benefit? 1. Bitcoin, BTC, always the digital gold. When institutions feel fear, they park money here. 2. Ethereum, ETH. If Europe faces financial strain, DeFi adoption could accelerate, pushing ETH demand. 3. Stablecoins, USDT, USDC, EURC. Businesses might bypass banking delays by settling trade directly in stablecoins. But here's where it gets interesting. Some European leaders have already hinted at exploring digital euro projects and even partnering with private crypto firms. Why? To reduce reliance on the dollar and bypass US control. And that's where the real opportunity lies. New altcoins tied to European trade could skyrocket if adoption speeds up. Here's the bigger picture. When rules change, fortunes change hands. European companies might struggle in the short term, but US manufacturers could boom. Meanwhile, crypto could quietly become the winner, a neutral currency for global trade. Imagine this: a German car company pays for US parts not in dollars or euros, but in stable coins on the blockchain. Faster, cheaper, untouchable by tariffs. That's not a fantasy. It's already happening in smaller trade routes. And Trump's $750 billion move could accelerate it on a massive scale. So here's the question. Is Trump's $750 billion gamble the start of a trade war, or the spark that pushes crypto into the mainstream of global trade? History tells us every crisis creates winners and losers. The only question left is, which side will you be on? This is FynoVault, where we don't just watch the markets, we get ahead of them. Subscribe now, because the next 90 days could define your financial future. Don't miss it.